Hello everyone and welcome to this special webcast on goods and service tax. My name is AMIT Sarkar and I'm here to share our thoughts as BDO India as India prepares to move into GST. After a 10-year wait, after a wait which went through several governments, several changes in the construct of GST, in the method of GST, in the policies around GST, and now finally the time to GST. At the stroke of the midnight hour of 30th of June, as India moves to 1st of July, India will, on the morning of 1st of July, wake up to a completely new tax regime. This tax regime will actually allow India, as a newly emerging economy, to finally speak the fiscal language of more than 130 countries across the world. Just that, as a single language of conversation in terms of how we look at our taxes and how our trade partners look at their underlying taxes, itself is hoping to allow India to become a truly complete member of the global village of international trade. But of course, GST is not just about how India converses with the world. GST is also about how India converses with itself. Over these years, from our days of independence till now, India was always recognized by its domestic business players also as a fragmented market. India was always looked upon as 31 Indias because each state had an autonomy to implement and charge its own taxes in whatever way they want to. Well, all that is now going to change. There is now true harmony in which all the states will be looking at their indirect taxes. What is goods, what is services, what is supply, what are the rates will be the same in whether you are sitting in a state in the north of the country or in the south of the country. And that, of course, is a very, very big change. Change which is hopefully going to allow people to eventually speak the same language, have the same amount of charge, and thereby truly demystify indirect taxes from business. Of course, the months leading to GST has been quite hectic. There have been a lot of false starts, 2011, 2014, 2016, 2017 April, and now 2017 July. As the dates kept on stretching and the law kept on evolving, we had gone and told our clients that there are 4 pillars on which your change management for GST should come about. Those pillars were GST positions, GST processes, GST systems, and GST compliances. I would like to take this opportunity to summarize our thoughts on each of these pillars and where we stand today. GST and its effect on tax positions eventually leads to a change in the way in which you actually do business, which basically means that you have to look at how GST as a liability affects your price, how GST credits, whether you have more credits or less credits, affects your cost, and as a consequence of the impact on price and the impact on cost, how exactly are your margins getting affected. Underlying all of this is, of course, the impact that GST has on your business working capital. So one of the critical functions that will be observed going forward as India moves into 1st of July is how exactly will GST look at your business working capital requirements, your business impact on prices, GST impact on costs, and the consequent impact on margins. Functionally, if you are a dealer in goods, if you are a manufacturer or trader or exporter of goods, GST would be an incremental step to a long path of reform that has already happened in your sector, because India had modernized its excise law, India replaced its single point sales tax law with multi-point VAT, and now we are topping it up with a comprehensive goods and service tax to cover all forms of supplies. As a result, hopefully GST will be net beneficial to you. On the other hand, if you are a dealer in services, GST is a completely new level of maturity in the indirect tax framework in which you are operating your business in India. You have only recently got covered under service tax from 1994 till date, and you are now going to be completely revamped into the new tax code, which is goods and service tax. While many elements of the taxes on services remain the same, however, it is no longer an independent legislation, but it's a sum total of a larger framework of taxes, and you have to now figure out how you stand in the new world. Functionally, therefore, if you are a dealer in services, GST may possibly be a net negative for you to start with, but it's only a one-time issue because you have to mature yourself, mature your businesses and your taxes and your positions into the new world of GST. However, if you are a person who deals in both goods and services, and if you are in a state of bundled supplies, which is where your output is a commingling of both goods and services, then there is an inherent complexity in the way in which you do business, and GST will therefore for you be a case-to-case fitment of taxes, positions and impact on corresponding prices and costs. Therefore, you have to take a better than normal attention to your margins. Key to managing all the possible problems, whether real or perceived in GST, is all about how you manage, claim and hopefully maximize your pool of eligible input credits under GST. What is an input credit? It is nothing else but the tax charged by your supplier to you, which is available as a reduction from your own output GST liability. The GST law and the consequent rules have prescribed various steps and procedures under which you should be claiming your GST credits. Of course, over here it is very important for you to keep in mind that before you go down understanding the how of claiming credits, you must be also very clear about the what of the credits that you can and can't claim. I am referring to all the legislative filters the government has put in place for your claim of credits, which of course is far diluted under the GST world as what you may have seen under the legacy indirect tax world. But the procedure for claiming credits is the big change under GST, and which takes us firmly to the process pillar that I was referring to. When you are claiming your input credits under GST, you have to register your claim. To register your claim, your purchase data, which you will upload as part of your monthly returns under GST, must match with the corresponding sales data that is uploaded by all your vendors. This 100% matching of your purchase details with the corresponding sales details of your suppliers and vendors is the key to GST compliances in India. And as you can well imagine, this one-to-one matching of your purchase transactions with the corresponding sales invoice details uploaded by your vendors and suppliers is a massive exercise. It is no surprise that India, as the software developer of the world, prides itself in believing that they can conduct this 100% matching of every purchase, every sale, every month by everybody in India in a real-time basis. Whether this big reconciliation experiment actually succeeds or not is going to determine the fate of how user-friendly or user-unfriendly GST can become. While we're talking about how to claim credits and how to take advantages of GST, the government also recognizes that GST will lead to some kind of additional benefits to businesses. Well, fortunately or unfortunately, the government has decided to also impose what we now call anti-profiteering measures under GST in India. It is a concept that India is adopting from its learnings of observing how Malaysia brought in GST and of course how Australia brought in GST as well. Unfortunately, unlike Malaysia and Australia, our government has decided to provide for the anti-profiteering clauses in the GST law, which essentially means that because of a reduction in the tax rate, you as a business are expected to pass the benefits of GST as a price reduction to your customer, or, and this is where it gets slightly murky, if you as a business are able to claim more input credits, that benefit needs to be passed on to the consumer through a price reduction. The first part of the anti-profiteering clause is pretty much a given. If you had a product which was applicable to 21 to 22% standard indirect taxes in India, and tomorrow that product is covered under 18% GST, there is a 3% reduction in the tax rate. Correspondingly, there should be a 3% reduction in price. The murky part is, how do you find out what is the additional amount of credits that you are likely to get, and how do you estimate that this is the amount of credits that should be passed on to the next component in the supply chain through a price reduction? The methodology is not yet announced. So this becomes an interesting watch this space area as businesses try to figure out what would be the objective methodology in which anti-profiteering would be tomorrow governed by the government authorities. As we move into GST, one important point that has to be kept in mind is the language of GST compliances is the language of information technology. What do I mean by that? The government is going to govern and administer GST through the Goods and Service Tax Network, or GSTN. Your business returns will have to be filed online. Every month there has to be a matching of your returns with the returns of your vendors and suppliers. In turn, your returns will be correspondingly matched with the returns of your customers to allow a free flow of credits after validation is done, which essentially means that accuracy of data is of prime importance in GST. To aid in that, the government has appointed a list of goods and service tax Suvidha providers, or GSPs as we call them, who are shortlisted organizations who are allowed to be getting real-time access into the inner workings of the GSTN in order to facilitate and hopefully standardize the filings done by their clients into GST. We in BDO have also applied to become a GSP, and as part of BDO India, we have also prepared our own application service protocol, which we will make use of to provide what we call a managed services model of service offering to enable our clients to smoothly transition into GST. Our service differentiator is we will not just make use of machines, but also our trained professionals to be able to provide that degree of accuracy, not just in quantity, but also in quality of the compliances and the data required to maintain and validate compliances in the world of GST. That, I think, is an interesting endpoint. Tomorrow, when you move into GST, the most important point is how accurate by quantity and by quality is my data when I move into GST compliances. He who wins the game of accuracy of data in GST can call himself to be a person who has successfully transitioned into GST. On that note, I wish all of you well, and I hope all of us this time next year sit back and exchange notes on how accurate and how truthful all of us were in our compliances, which will lead to better management of working capital, margins, costs, therefore prices, therefore administer anti-profiteering well and successfully migrate into GST. Thank you so much for listening to us. To watch this webcast, log on to bdo.in.